Hello, my name is Fernando Bender. I am the developer manager at Greenfield. With our software Wild Horses, we forecast prices of financial assets, commodities, forex, main stock market indexes, and cryptocurrencies. Today, we are going to analyze Ethereum quoted in United States dollars, the pair ETHUSD. So, in the first graphic here, we see how our software Wild Horses has framed the prices in channels that best describe its behavior. As we see, the long-lived downtrend channel that has started in late January, start of the year, that channel that has been tested several times and recently, maybe the last 10 weeks, has been permanently tested at its top and not bleached. He was bleached recently in this week that ended on 23 September, and that is a major achievement for the coin because this channel was strong, contrary to Ripple channel, for example, that, as we have been commenting in our previous analysis for who is following us, we commented that channel was circumstantial because clearly there was just a sudden move up and down in the coin, and later on it became on a very defined horizontal trajectory. That's why the channel was constantly being bleached and a new channel was being formed each time more horizontally framed. Now with this one, no, this channel was long-lived, was long tested, and finally it was bleached, and that is an indication of a change of pattern, of a change of behavior from a downtrend to an horizontal move. If you have following our analysis in the previous one, in the previous two, we have commented that Ethereum has not yet found its bottom and was in the search of it. Apparently this bottom was formed in the 2 weeks ago on the 16th September Sunday. So what we see now is that there was an increase in the volume from previous week to the current one. And what does that mean? Well, in our analysis, we start from the premise that prices are ruled by the volume of negotiation. Why? Well, coins are new. Crypto coins, cryptocurrencies are new class of assets. And then the volume of negotiation means how much it's being traded, and that is a measure of strength of the signal, and that reflects in the prices, because when there is an increasing in the base of usage or investment or speculation, you enter by buying it, and once you buy it, the prices go up, and that's associated with the volume. Once it reaches more level of maturity, then you lose correlation between volume and prices because the inflow and outflow are somehow constant, and you have small variations that cannot, in the price, that cannot be explained by volume any longer. So at this stage, we firmly believe, and it has been so, that the prices are being ruled by the volume of negotiation. So anything will reflect in volume, and that will reflect in the price. So the background of this graphic corresponds to horizontal lines that are colored according to this side scale here, ranging from the white to the blue, and it depicts the percentage of time in the visual area of the prices plot that the prices were within that region, and that gives an idea of attractors, meaning the regions that are more blue colored, they tend to attract the prices primarily, meaning without much volume over the recent average, the prices naturally tend to converge to it, and to diverge from it, meaning to leave it, they will need volume over the recent average. So what we see now is that the prices converge here and now are still within, but they will need some higher level of volume, like here for instance, to break it and to try higher levels. But if those levels cannot be maintained and there is a sudden reduced level of negotiation, then the prices also fall, which is very much according to what we just spoke, that volume and prices are correlated. So in this graphic, the information that we have is positive, which the downtrend was apparently broken. This channel was broken, and now it still remains within a region that is horizontal, which is this strip at the bottom of the sequence, and it tends now to continue so, meaning within this region. So even if the prices fall, it will still lies out of the downward channel that it recently breached. That's it. To have further information about Ethereum, we will analyze it on a more short-term perspective with an horizon of 23 weeks in opposition to the 59 weeks that we use for this plot. Here we see that the prices still remain in a downtrend channel, and this downtrend channel, this picture, it works as a zoom of the previous one. This channel was formed in May, early May, late April. Was identified in early May and has been tested a lot in both bottom and top limits. So it has not yet been bleached, and that is a very strong channel for both reasons. It was tested a lot and resisted, and it is not wide. It is the limits are very close. We have commented this in previous analysis. We are talking about what, $250 between the limits. Now that's a very near limit distance for a channel like that to be that much strong. It has been lasted 3 months now. So this means that it describes very well the prices behavior. This is one. And the second thing is that it will need some strength to be bleached, a strength that has not yet been present in the prices. So we look again at this inferior bar, and we see that the current level of volume of negotiations relative to the recent average has been present before. Even slightly higher volumes have been present, and they were not enough to bleach the limits. That's why we believe that by this information, it's not likely that this channel will be bleached unless we have a spike or a rise or a continuation of elevation in the volume of negotiation of Ethereum related to the previous average. And then, yes, we can bleach this channel. Otherwise, it will remain within it. That means that the decay of the prices will be along this limit inclination, meaning it will fall something like $50 from this week till the next one, meaning if it continues like that, it will end $50 lower than previous week if it doesn't bleach the channel. That's what this plot says. So to have an idea more precise from a different point of view, we now switch to an independent analysis that our software does, which is solely price forecast. In this plot, we see that the black line corresponds to the week closing prices. It's the only information that we take in consideration in our analysis. And the gray line consists in the corresponding forecast that our software made for it. So as we see here, our average error has been 10%, and that corresponds to 66% of the average variation of the price in the period. What does that mean? It means that on average the prices vary 15% per week, and our error has been 10%. So our error is less than what prices varies. That's an important indication of performance of the forecast, and we have been succeeding on it. So the variation of the prices from one week to another just let me clarify, this 15% is a lot. Imagine that you have a currency, let's say the cable or the euro quoted in dollars, that let's say it's right now 1.15, and for the next week it might 1.30 or 1, so you don't know. From one week to another it can go from 1.15 to 1.30 or to $1. So from parity to 130, that's the range it can go, from 1 week to another. So it's quite wild variation range, and that's precisely what we are facing here with Ethereum. That's why an error margin of 10%, that if you consider it in overall analysis, it's quite large, but considering the volatility present in this asset class, that's a good result. So this algorithm here forecast a slight elevation, meaning that the price forecasted for the next week ending on 30 September, this next Sunday, it is slightly above the last closing, meaning the previous week closing. And the interval that this algorithm admits is all of it within the blue area in the first graphic, but totally out of the downtrend channel. And this interval here is nearly completely out of the channel of the previous graphic on 23 weeks, meaning there are good chances that that second channel in the 23 weeks perspective will be bleached as well, and that will mark a definite change of downtrend to sideways walk in the price move. Now to do so, the prices will need a negotiation volume that keeps increasing or remains in the same level as previous week. If we have a decrease in the volume of negotiation from previous week to this one, then it's not likely to happen. That downward channel in the 23 weeks will keep leaving and will last some few more weeks until we are able to bleach it completely. But the more we try, the more we fail, the less likely it's to do it. That's it. That's our analysis for the Ethereum of this week. Thank you very much for your attention. Keep following us on YouTube, and you can also join our Telegram channel. I'll put the link here below, and you are all welcome to put suggestions, comments and critics. We want to enhance our work, and you are counting on your views, your opinions. Thank you very much. See you in the next video. Bye.